Hello there everyone and welcome to this edition of Closing Trades. I'm Avan Dabash and with me is Aisha Faridi, and Aisha, you're matching the markets. We're at the day's low for the index and grinding lower. That's largely owing to the fact that you've got a lot of the large caps that are coming under a bit of pressure this afternoon. Auto, real estate, IT as a basket, and you've also got investors weighing the economic outlook, which is why you're seeing the European markets as well, which have got off to a start on the back foot. So for now, we're down about 100 plus points on the frontline index, around 17,620. It's, as I said, a lot of heavyweights that seem to be leading this loss. So the likes of Reliance Industries, for instance, ICICI Bank, Infosys, they're all putting quite a bit of pressure on the index. Add to that list, you've got something like a Bajaj Finserv, Maruti, Eicher Motors. All of those stocks are clearly taking it in the chin, along with ITC under pressure. But despite this, you've got metal stocks which are bucking the general trend. That's largely on the back of rising prices. So the cluster of metal stocks seems to be holding out quite well. While the auto index has snapped its 3-day gaining streak, a lot of heavyweights within the auto space have come under pressure. In fact, just let's focus in on some of those metal stocks that are active in today's trading session. There's Jindal SAW, for instance, which has spiked up a solid 6.5%. GMDC is in the green, and otherwise gains to the tune of about 0.5 to 1% on Tata Steel, JSW Steel, as well as Hindalco and SAIL. Auto, as we said, has put the brakes on their gaining streak. So names like an M&M are down 3%. You've got even auto ancillaries like Samvardhan Motherson, Apollo Tyres, Maruti, Hero Moto, all under pressure, Aisha, in today's trade.
Oh yeah, that they are, definitely. In fact, we're seeing most of these names weigh heavy on the indexes. In the meantime, let's also focus in on what are the stocks which are in the news this afternoon. And while Avan just highlighted that it's actually metals which are taking it on the chin, Jefferies came out with a recent view stating the metals as an underperform as a sector. They say that a buying opportunity is not something that they quite spot right now. They're saying that China economic data is showing signs of a recovery coming in. The metal bets, of course, are Tata Steel as well as Hindalco. There's also Home First Finance. That's another stock which is in focus. And a sizable near about 8% equity has actually changed hands in a block trade earlier today. So that's another stock which is in focus as well. And Manappuram Finance too, it's the top F&O gainer. It's been managing to put on gains for a 4th consecutive day. In fact, CLSA maintains a buy given the low valuations for this particular stock and the competitive intensity from banks, which they think remains unchanged for Manappuram. Right now, the stock holding up 3%. On that note, let's talk about the trading day so far. We have with us Kunal and Naresh joining in. Gentlemen, hi, afternoon. Kunal, quiet start, drifting lower, but still all okay, I guess?
Yeah, seems to be all okay as of now, but then today is a weekly expiry, so the options data is also a lot more prominent to look out for. And I think from the noon, the data changed quite dramatically from the options perspective. So from being at a point where there were 41,500 strike, which was seeing an incremental amount of put writing, which is typically bullish for the indices, we saw a complete change of stance, and the data tilted towards 41,500 being a strike where there was extreme amount of call writing. Now that indicates that this would remain as a resistance for the index. And in fact, in the last half an hour or so, the data is now tilted towards 41,400 strike being also written. So that indicates that the markets may remain under pressure for some more time. Possibly it could be an expiry play, and we may expire on the Bank Nifty below that 41,400 mark on the spot basis.
Right. Naresh, hi, afternoon. How is it that you're viewing metals? You can see Tata Steel, JSW, etc. gaining ground, but would you read too much into today's price action?
So I would wait out some more time before we start looking at it constructively. There is a consolidation formation going on across the metal names. The problem is there is not enough momentum to actually trade. So if you look at the Tata Steel, it's just a one-day uptick as of now. The stock has been at the same 110, 115 band for the last almost 6-8 months, not gone anywhere. So if I have to trade metals, I'll be looking out for a Jindal Steel, which can eventually break out. So that's the only stock which comes up on the radar, wherein the stock has shown relative outperformance, and a base is there at 540, 550. So going forward also, I'll be only looking at Jindal Steel.
Let's also bring on board then Sandeep Sabharwal, who's joining in on the fundamentals. And Sandeep, what's your outlook on the fact that when it comes to the frontliners, it's it's the metal space that is managing to buck the general trend. Do you believe that we could see some, incremental traction play out within this space for the long haul as well?
I personally don't think so. I think it's more a musical chairs kind of thing which is playing in the markets where sectoral rotational is happening. Markets are not going too much up or down, and it's more a function of a lack of conviction, largely among investors, I guess, about the direction given the news flow which comes out on a periodic basis about potentially higher interest rates and its impact on the markets.
So, Sandeep, what do you do in this market right now? Are you spotting opportunities to buy in this kind of time-wise consolidation which is taking place?
I think sectorally, there are some sectors which we should be avoiding, for example, largely like technology, because there are still a lot of uncertainties around chemicals and related spaces because Chinese supply is increasing and their demand is still subdued. So I think the pricing could trend down, etc. While domestic links sectors are still looking okay. So I think on weakness, four-wheeler auto stocks could be bought. I think the entire infrastructure, construction, capital good space has good traction going for it despite slightly higher interest rates. So I think those are the sectors which I think still offer opportunity.
I would urge our viewers to stay tuned in. We've got, I would say, another mega exclusive. India's largest private sector bank, the CFO, in its first television interview ever. The CFO of HDFC Bank, with where the CASA ratio of the bank is headed, how are they growing at a rate which is at a large balance sheet, which perhaps is the second largest balance sheet only after SBI, is growing at 15% plus. And what are they doing in order to ensure that the merger process really goes through? So that's one interview you certainly don't want to miss. Stay tuned tomorrow morning, all day tomorrow on ET Now, the CFO of India's largest private sector bank. Sandeep, what would you like to hear from HDFC Bank? I mean, they are growing at an enviable rate now. Their CASA ratio is decent. And when world is struggling for deposit, at least when Indian banks are struggling for deposit, they've done a great job of adding new customers.
So yeah, the deposit accretion has been one of the strongest, and to that extent, they obviously so it's all about deposits in a rising interest rate environment. So that's why I always say that the larger banks have a clear advantage over the smaller ones in a tightening liquidity and rising interest rate environment. When it reverses, then the smaller banks tend to have a greater delta. So I think things are going decent for them. The only thing is uncertainties around any relaxations they'll get on the margin related to SLR, CRR, etc., which I don't think they'll get. And to that extent, they will need to increase the deposit accretion at a much faster rate, which will be tough, at least on the CASA side, because that grows only at a steady clip. So I think it will be more from the term deposit side.
In this year, actually, HDFC Bank has done much better than what ICICI Bank and Kotak Mahindra is doing. Sandeep, where is Kotak Mahindra Bank now? I mean, it's in a very unique position, which is that they don't have a subsidiary which is listed. They don't have a, excepting Kotak Securities, they don't have a number 2 or number 3 stock, spot in the life insurance business or the general insurance business, and even in the securities business. So where is the standalone franchise like Kotak Mahindra Bank headed when they are, in a sense, they are not growing the balance sheet as per what other banks are growing?
See, franchises like Kotak Bank or on the NBFC side, Bajaj Finance, etc., had a special role at one point of time because they were going at a rate faster than the market, and they were keeping their asset quality much better than the market even while they were continuing that growth. And that was a story till 3-4 years back. In the last 3-4 years, lot has changed. Most banks have similar NPA ratios, similar growth, like 1 or 2% here or there. And Kotak Bank, to that extent, has lost out somewhat in growth earlier as they were cautious. Now they're trying to pick up. But on valuations, if you see, they are the most expensive bank even more expensive than HDFC Bank still. And obviously, Bajaj Finance is still much more expensive, with no reason why they should be so expensive. For example, they traded twice the price to book to of Axis Bank. Now, do they should they be trading at twice that valuation? So I think that's the issue with Kotak Bank, and to that extent, I think there's still a long phase of consolidation ahead for them. I don't see significant returns from Kotak Bank anytime soon.
Exactly what we were talking about yesterday as well, right? The kind of, divergence that you are seeing within banks. We were talking about HDFC Bank, about 203 odd percent away from its 52-week high. ICICI Bank still skirting around, or I think 700 could be a good base for that one. You would know better. And then Innocent Bank, which is just showing so much buoyancy off late. How do you now deal with the entire banking pack? Do you bet on the horses which have not participated this year, or do you stick with the leaders?
Yes, you stick with the leaders. I think HDFC Bank is a classic case over here. The stock has been a big underperformer. But then, an underperformer for 2 years, 3 years does not generally continue to underperform. There is bound to be a phase where the stock would not just play a catch up with the overall mean reversion or the underperformance from the other peers, but even show signs of strength as well as a comeback. I think we've started to see some signs emerging, at least so far this year, with the relative strength coming back into the likes of HDFC Bank. My sense is that one of the major reasons why the Bank Nifty had been unable to break past above major levels on the upside and the momentum was not too much strong was because of the lack of participation from these private sector names. But then one by one, these large cap private sector banks, I think except for the likes of Kotak Bank, are making a very strong comeback for themselves. So I would probably believe that it's a good time to try and chip into these names from a medium to long term play. The fact that these stocks have been big underperformers also makes the risk reward as well as the time wise risk reward very attractive. So HDFC Bank, ICICI Bank, even IndusInd Bank, I believe are few attractive plays from current levels.
If you think about it, this year actually there is no stock which is the meme stock for social media. 2 years ago it was ITC, then it was State Bank of India, then it was HDFC Bank.
Maybe
Adani
new age
names.
tech.
No, Adani have not spent. Adani is like the long await in terms of a stock participation. Adani is the reverse. I'm talking about, let's say, an ITC or in State Bank of
ITC
India.
was most mean when it was the underperformer, right?
Yeah.
And so is the case with Adani names.
Adani's come back.
Yeah.
Adani's actually come back. I mean, it's
That
come back to
means both
reasonable.
ways, when it does bad and when it does good.
It's getting a lot of attention for sure. I mean, that's for sure. Nuresh, Ambuja Cements, it has cracked from levels of almost 600 to levels of 380. What is the right price technically to your mind where Ambuja Cement should settle? It will not settle at 350. It will not settle at 600. It has to settle somewhere in between.
So if you look at the price action, say the fall started from 500, 520 levels. Now, if you look at the rest of the markets, we've seen a little bit of a correction. The sharpest downtick came from 460 to 340 in a single day. So I think 460 would be a tough ask. So my view is somewhere closer to 400 to 440 is where it should eventually settle. And dips closer to, say now, earlier we were buying on dips to 330. Now the base zone shifts to 360 to 370 levels. So I'd expect it to not break 360, 370. So you want to buy it as closer to it and expect a move towards 400 to 420 slowly and steadily.
Let's take a very quick break on that note. When we come back, we're going to continue our discussion with our experts on board. We're down 144 points now for the futures, 130 points actually now. Adani names not participating as much. M&M is down about almost 2.7%. There's RBL Bank, Balkrishna Industries and Dixon, which are also the underperformers. Take a break, be right back.
Earlier in the day, we also spoke to the management of V-Mart, and where they're admitting that in the rural India, there is a K-shaped recovery, and that explains that why post-COVID, while urban India has recovered, luxury consumption has recovered, a lot of rural ends of the economy are still struggling. It could be inflation, it could be, disposable income coming under pressure. Bottom line here is that the rural demand, at least for tier 2 cities, is under pressure.
Those lower earning group member people who forms almost 70% of the population of India, they definitely have reeled under pressure of inflation. and their budgets, their household budgets has gone down. So I think there they are struggling, and that is what is causing a little bit of slowdown. And we are seeing those slowdown right from post-COVID environment, because post-COVID, during COVID, they lost some of their income, but post-COVID also they couldn't regain back their income, as well as the kind of inflation which ate into their pocket, and that's where what is affecting those kind of slowdown. But yeah, gradually quarter on quarter, month on month, we are seeing betterment on those side. Last quarter, we reported almost 11% degrowth from the pre-COVID times, from the same store, like for like stores perspective is concerned. So I mean that also I think incrementally is getting better, but still there's not we are not seeing a growth over the pre-COVID level. And categories, primarily categories of the apparel, because that's the biggest segment that we sell, and the fashion segment. So that we see there is some kind of degrowth which has happened there.
Sandeep, is it a good time to buy into the distress of rural economy? I mean, it's now almost public information and general knowledge that the rural India is under pressure. Retailers are admitting it, something which they were not acknowledging it. Do you think markets are factoring that in? And if anything turns, it's going to be on the uptick now?
Yeah, I would like that largely it's turned in, it's been factored in because inflation, high inflation, like increasing inflation was more a 2021-22 kind of story when and the time when RBI actually said there is no inflation. At that time, the inflation trajectory was very high. All of us listened to company managements, etc., and they were saying that they have not seen this kind of inflation in the last 20, 30 years. Now, I think all those things have moderated. All companies are saying that they are not going to take price hikes. In fact, there are promotions, price cuts happening across many categories. So I think as inflation moderates, which it's already happening, we'll see the demand come back happening. And if that's also combined with decent crop prices for the farmers, etc., then that will also aid the recovery.
All right, the entire sugar cluster as well has been in the spotlight. Let's hear it out from Pramod Patwari, the CFO at Balrampur Chini, who we interacted with earlier. He says that international sugar prices have been decoupled from domestic sugar prices. He also shares his outlook as to when he believes the government will relax the export cap. Listen in.
So as far as the international sugar prices are concerned, we are of the view that international prices are somehow decoupled with the domestic prices. The reason behind 6 to 7 years of international high sugar prices is there is some sort of physical tightness into the system in terms of gaps, availability gaps. Though overall there will be surplus at the global level, but in the interim period, as because the logistical issues are there in Brazil, there is some physical tightness. Domestic prices has not really moved up in last couple of years, though the cost has increased significantly.
Okay, just let's get in a quick chart check then on some of these sugar stocks as well. And Naresh, what did your take? Seemed to be very flash in the pan move yesterday.
So I would say it is something where a base building formation is happening, and the sugar spot prices have already broken out. Now it's time for slowly and steadily all these sugar names to make a comeback. So if you look at Balrampur Chini, yesterday's move was again a retest of that 400 to 410 mark, which is the high for the last almost 8 to 10 months. And the stock has gone through a sideways consolidation, a very tight one, 330 to 410. And over the last 3 months, it is between 360 to 410. So it should spend some time here before that breakout above 410 happens. So constructive on the whole sugar space. It would be a slow and steady move, unlike the flashy moves which it has seen before. Same is the case if you were to look at a Dhampur sugar or any of the sugar names. You'll see most of these names have consolidated in the 20% range for the last 8 to 10 months. So bullish on sugar names. This fade off move, say a move back to 390 to 385 on Balrampur would be a buying opportunity.
Sandeep, same time last year, the easy trade was buy commodity producers. Any company which is into commodity, buy commodity producers because inflation was going high. Now that things are reversing, inflation is topping out, commodity prices are coming down. Is it time to go back to commodity consumers now?
Yeah, and say the commodity consumer trade started a long time back. So and the move in many of the companies they actually consume, like the plastic processing companies, which actually suffered a lot when the prices shot up. They benefited a lot. Many of the auto companies, tire companies, or anyone who consumes, or even some of the consumer companies are benefiting because of the fall in palm oil prices and other input prices. So I think that trade is already on, and I think it will only become stronger going forward because the big driver of a commodity up move has to be Chinese demand. And given the way the Chinese economy is performing despite last year being a COVID year, so I don't think there's going to be any huge commodity demand comeback happening anytime soon.
Good to have you on the show. We'll let you go on that note. Let's take in some closing trades as well from both Kunal as well as Naresh. Naresh, you go first.
So buying on Indraprasth Gas Limited, the stock has broken out above the 445 mark. Retesting that same band today around that 445, 447 makes a good risk reward buy. Would keep a stop loss at 439. Expect a move towards 480 in this one.
Kunal, what about you?
So I'll go for a non-FNO stock. Ujjivan Financial at 285 looks very attractive. The stock has confirmed a swing breakout on the weekly charts as well and breaking past above a major trend line resistance. So that's a stock which I would look to buy. Near-term targets which I would keep in mind would be closer to 305, 310.
All right, time to take a very quick break right here on the show. And as we do that, let's hear out some top fundamental ideas from Hemang Jani. He believes that utility and power stocks look interesting.
Utility stocks have remained relatively better off in the last few months. And if you see the volume data points and the tariff part, there is a fair bit of stability. So we do think that, names like NTPC, Power Grid are the ones which will provide some sort of a stability with a good dividend yield for those who are, looking for a low risk ideas. At the same time, some of the companies which are providing the equipments to some of these utility companies, on the capex side, I think that is the only segment which is showing a lot of strength, and the order inflow for them continues as the capex cycle is moving. So I think we should focus upon capex. So the names like ABB, Siemens, Larsen, and also some of the power utilities in an environment where there is a slowdown and the overall market may not show much of resilience.
Closing trades right here in ET now, 130 points softer is where we're currently at, 70,659. Sectorally, actually, barring metals, not much is holding out in the red. But besides an M&M, besides, yes, Reliance definitely weighing down quite heavily on the index today. That's down 2.25%, 2369 on that stock. Barring all that, auto sectorally underperforming, yes, Maruti, Tata Motors, but there are no deep gashes either. IndusInd Bank, the big outperformer from yesterday, that's a little quiet today. It's a little soft, about 0.3% or so. HDFC Bank also is pretty flat right now in trade. And yes, there's ICICI Bank and ITC as well, which are a little bit on the sidelines. We have Dipan Mehta joining in on the show right now. But before I take it across to Dipan, Naresh, just a quick call on Reliance. Down over 2% right now as I see it.
Reliance Industries in terms of a technical formation, the stock goes to that closer to that 2300 mark, bounces back again and again. This time around, the bounce back was at closer to the first bounce was closer to 2460. Then again, it came down to 2313. The bounce up till yesterday was 2420. So the interim high is 2460. Till the time you don't cross that, the trend does not change. And say below 2280 is where the trend changes. We are right in the middle of this range. So out here, hopefully over the next few weeks, there would be at some point of time a resolution of this sideways period. And once it crosses 2460 or 2280, it can be a nice 5 to 10% move on the stock also possible.
2363 for Reliance. Dipan Mehta, just when everybody gets excited that it will be only Vimal, it never works, right? 10 days ago, everyone thought only Vimal, Reliance time in the sun has come and the stocks come tumbling down.
Yeah, Nikunj, good afternoon. Thank you for having me on your show. There are no real reasons why Reliance should go up or down by 1 or 2% or so. There are no developments that I'm aware of. And these are just technical considerations, fund-based buying, selling, which comes into play. And we should not read too much into it. I think by and large, the company is following through excellently on its strategies and plans. And the only real question in my mind and that of the investors is the value unlocking process which may emerge now that there are three solid businesses within one entity. And not all investors want to buy into all the three businesses. So how are they going to split the company, or will Reliance become a holding company by doing IPOs in the other, the retail and Reliance Jio? So that remains the biggest question at this point of time. But other than that, I think they are just it's just business as usual over there. There are some investor concerns about again debt going back in the company, but we have seen how Reliance management handles debt through equity dilutions in the emerging businesses, and that particular path is well trodden, and they can certainly follow it up for some of the other nascent businesses which they are developing within the group entities.
So, Dipin, would you make Reliance as a portfolio stock for next 3 years? I mean, 5-8, the weightage is 10% in the Nifty. Would you like to allocate similar kind of a weightage and make it as an anchor portfolio stock for next 3 years?
See, Nikun, as a general rule in our portfolio, our preference is for mid-cap stocks, where we can get growth of at least 20-25% on the earnings per share and hope that the stock price also goes up by 20-25% or so. So that's how you try and target to double your portfolio. But for a safe investor looking at trying to just match the benchmark, you cannot really avoid Reliance Industries. If you are expecting returns in line with the Nifty and the Sensex, then you need to have a sizable portion, maybe more than 10% of your holdings in a company like Reliance, because I do feel that on a 3 to 5 year basis, you may see Reliance outperforming the benchmarks, given that we are quite negative on commodities and some of the other companies within the Nifty and the Sensex. So the simple answer is yes, but my personal preference is for small, mid-sized companies which give an opportunity to create wealth, hopefully if they become multi-baggers.
Okay, that's the word coming in on Reliance Industries, 2362. That's 2% shaved off in trade today. Meantime, Dipan, just curious about your take on the entire auto space. It is being weighed under pressure, but what is it that you believe could be the next catalyst or next trigger for the auto sector as a whole? What's your expectation in terms of numbers?
See, I think already a catalyst and a trigger is in play, which is why we've seen auto outperforming for the past few months or so. We are seeing good pent-up demand came into play. Then we saw the trend of rising average realization prices for the sector as a whole because of premiumization. We've seen volumes come back very strong because of increased transportation needs, as well as overall, I think the new models have excited a whole host of new generation consumers and customers. And the auto industry volumes really have gone nowhere for the past 10 years compared to the GDP growth rates. The actual volumes on a 10-year basis compound have been much lower. I don't have the number exactly, but I don't remember this fact. And it's but natural that we are seeing an upcycle in the auto industry. More or less, the margins are maintained or going to improve because input costs have come under control and operating leverage will come into play. And this is a good sector to be invested in if you are particularly positive on rising consumer spend. So keeping all of that in mind, we want to be overweight in autos, but preference is for four-wheelers, be it commercial vehicles or even passenger vehicles, and want to be a little bit underweight as far as traditional two-wheeler companies are concerned. But then again, we are quite optimistic on Eicher Motors prospects.
All right. Meantime, just want to pull up some buzzers as well in today's trading session. On the upside, you've got something like a REITs that is managing to hold out in an otherwise fairly tempered market. Within the Nifty 500 as well, some of the other stocks that are managing to buck the general trend include a Sequence Scientific. You've got a Jindal Saw as well. That's a buzz. And Rail Vikas Nigam is active. But Mastech, Dixon, those are some of the stocks within the mid-cap space that continue to be weighed under pressure. Naresh, let's get in a take on Mastech on the charts and what you are advising on a REITs.
So Mastech is making a bottoming out formation as of now, but would have more confirmation once it can sustain above the 1850 mark. We are still quite a bit away from that price point, but it's made a double bottom around 1540, 1550 levels. So looks interesting. There could be a bounce back trade, but as of now, would wait on it. RITES, on the other hand, is something which looks very promising. The stock had this huge move from 300 to 430 levels, did a retest of 300, 310 zones, and now is starting to make a fresh move. The recent swing high for the last 3 months was around 365. Today it has crossed about 365 mark. Any dips back to 365 to 360 zone would be a buying opportunity. And I would be bullish on it and eventually expect it to cross into a new all-time high again as well.
Just scouting some of the other names, Tata Steel definitely is, springing up in trade. There's a Bharti as well, which is higher by 1% or so. Delta Corp, Shriram Finance, Manappuram, SBI, SBI Cards, that is, not SBI. It's an unusual list of winners out there as we see right now. Manappuram reminds me, Kunal, you track the charts of gold as well. Haven't tracked that one in a while. What's happening with gold? Still at highs?
No, I think it's come off quite well. So I think from 59,500 we hit that level on gold on rupee terms. I think we are somewhere around 54,800, 55,000 on gold. The correction is more sharper on silver, because I think that asset class has corrected from almost 72,000 to now 61,500. So it seems to be more of a corrective way for both gold and silver, and I think the correction is also panned out more on the global charts for gold, silver. So maybe this could be a phase where the commodity cycle, especially the bullion cycle, is getting into a corrective phase. So maybe another correction of 4-5% for the near-term charts for gold and silver.
Dipen, as we unwind this financial year, now soon the template will be from FY23 to FY24, which is come earnings season, we'll start talking about FY24 and FY25 guidance. What do you think is the market positioning ahead of earnings season? Because that in a sense will determine at least the next 5-7% move on benchmark indices, what we hear and what companies indicate.
Yeah, Nakul, but it's a bit premature. I think let this particular financial year and month get over, and then we'll have hopefully some advance estimates do come from companies from time to time as to how the month has gone by, especially momentum indicator from the auto industry, GST collections, and some of the retail players also give out what their performance has been for the past quarter. So that will set the tone for the earnings, and then immediately by the around 10th or thereafter middle of April, we will start to get the software company numbers as well. My expectation is that it will be a decent quarter, especially banks. I think should do exceptionally well. And we need to see further confirmation how the IT players are dealing with the sort of expected cuts in IT spend because of global headwinds. And as I said, I think very positive on certain consumption-related sectors like auto, real estate, hospitality, healthcare. I think these are the ones that should give out decent set of numbers and keep up with the momentum which we saw in Q3. By and large, I don't think that the earnings season will be a dampener, and we could see maybe a few more ideas emerging from the earnings season, and may perhaps if things go well, trigger a move or a breakout from this very narrow trading range we've seen for the past several months.
Well, Indian Hotels is marching towards a new high. It's one of those stocks which has mesmerized everybody with the ability to charge commanding rates. You got HDFC Bank. Now here's a programming reminder. HDFC Bank tomorrow, first interview of the CFO, first television interview of the CFO ever. And it's not like the first interview after the NCLT approval, no. First interview of the CFO on television ever. And that's something which we would be playing tomorrow the whole day. So that is something where you want to just keep your keep your appointment with us, because HDFC Bank is now really firing all cylinders in terms of growth, CASA, technology, and also where they're projecting the company to move now. So Dipen, in this lull market or dull market or lackluster market or momentumless market, how are you keeping yourself busy? Where are you buying? What are you doing?
Actually keeping ourselves busy by traveling, and I've had a few holidays and going on another holiday end of this month as well. I think sometimes it's better to do absolutely nothing in the market. The inactivity, kind of recharges you, and we are kind of waiting for the next earnings season to start. Typically, as long-term investors, we want to have a complete view of the company management commentary, see what the quarter has been before we make any fresh purchases. And that has paid off very well in the past. So I think we'll follow the same strategy. We'll wait for the earnings season to start, analyze the company results in detail, go for the con calls, and then come up with a new set of ideas, if at all. Other than that, I think portfolio which is broadly into auto, banks, select technology, consumption-oriented stocks, some of the profit-making platform companies, I think that's doing pretty much fine. And what we are seeing is that prices have gone nowhere for a lot of stocks last, say, 6 to 12 months or so. But time has lapsed, earnings trajectory has remained more or less stable. And price to earnings multiple have certainly got compressed in our portfolios and what we see for other clients and the market as a whole. And there's only so much of P compression which can take place. And once we have some kind of a handle on when the rising interest rate scenario will come to an end, then you will see an inflection point for the markets. And we are patiently waiting for that inflection point where this entire P compression starts to get reversed and we have P expansion, which will be in line with when the interest rates have peaked out and they start to decline.
You talked about all the travel and the holidays. I was just looking at the returns on the hotel stocks and it's quite intriguing. I mean, Lemon Tree, to think of it, year to date has fallen 7%. Of course, returns from March 2020 till December are exorbitant, as it would be for any stock for that matter. EIH as well has lost about 5%. But yes, Mahindra Holidays, it's up 5%, and Indian Hotels has given you a gain of about 2.6% on a year-to-date basis. And if you want to club Delta Corp as well within that pack, 6.5% is the year-to-date loss that it has seen. Kunal, what's looking strongest? And would you, by default, stick with Indian Hotels?
Yeah, I'll stick with Indian Hotels. I think that's a more formidable name, less beta, low volatility as compared to the other mid-cap or small-cap hotel stocks, whether it's Chalet, Lemon Tree, Oriental Hotel. These stocks have been very, very high beta nature. Even in the last 2-3 months, for example, there was a correction of more than 20 to 30% for most of these mid-cap names. Many of these stocks retested, went below their 200-day moving average, and then bounced off from those levels. But then Indian Hotels, I think, has been more resilient. The stock has been holding on to its 200 DMA broadly. So I think that's a more formidable name. And even on the medium-term charts, the volume accumulation for the stock has been very, very attractive. So I think at 320.24 approximately where the stock is trading right now, I would believe that from a near-term play, there could be room for the stock hitting up levels of 340 plus. And once that levels is taken out, I believe even rooms for a new high could be seen on Indian Hotels.
Important source-based story. Sanjay Chamaria's stake in Poonawalla is valued at 300 crore and the family is likely to exit Poonawalla Finance. Poonawalla Finance was acquired by the Poonawalla family, and this in a sense is an important why, because now a complete professional management takes over. Ajay, break the relevance of this news for us and why is Sanjay Chamaria's exit important?
Well, that's correct. We are picking up from our sources, Nikunj, that there's a block deal which is likely to happen in Poonawalla FinCorp. As we know that Poonawalla FinCorp was earlier Magma FinCorp, and that family, Chamaria family, was the original founders. And then when it got acquired by Poonawalla, the stake went there, but there was still residual stake of 1.4% with the Chamaria family in this combined entity. We understand that this stake worth close to 300 crore may be sold off to a group of market participants, and we understand from our sources that Ambit is the sole broker to the block, which is likely to happen very shortly. And if you see the kind of participants which have shown interest to the book which is being built as we speak, mutual fund companies, DIs and large PMSs have shown interest. And this also comes right 15-20 days after, just a while back after the results, Poonawalla current management had given a detailed roadmap of 35-40% kind of growth. All of that had happened, and now we are picking up from our sources that a block deal could happen of 300 crore where Chamaria family will completely exit as far as this block deal is concerned. So it will be a professionally run. Poonawalla, of course, will be that family will be the core owners, but it's a professional management, and this is perhaps bringing interest in this particular block from market participants.
Right, Ajay. Great news break. The erstwhile promoter in this case, they are looking at exiting the company completely. Dipen, would you chance your arm at Poonawalla Finance? I mean, now they have the ability to scale up. With the Poonawalla brand, their cost of borrowing, which is like the bedrock or the bloodline for any lender, that could be amazingly better. They could command rates in the wholesale market from where they borrow, which could be in lines with what the Bajaj Finance and the Tatas of the world command, because they've become a Poonawalla company now.
Well, that assessment is fine, but Magma FinCorp got into a lot of trouble when the NBFC crisis took place, and to the extent that they had to undergo change of ownership as well. And we are getting into a situation where liquidity is going to get tight for NBFCs, and banks are offering higher and higher interest rates. And my preference is for banks which have got very strong CASA. I'm a bit cautious when it comes to NBFCs. Especially more cautious when it comes to NBFCs which have not weathered the NBFC storm post ILFS crisis. I'm very skeptical of those companies. So within the NBFC space, three companies which come to mind which really manage their operations well despite ILFS crisis and despite the pandemic are Bajaj Finance, Cholamandalam, and Sundaram Finance. And these are the only three companies which I have my faith in. Of course, HDFC is in a class apart, that is getting merged into the bank. So there are only three NBFC that we are really looking at or tracking. And then we have all the banks, mid-size, large size. I think they are far better placed this time around than the NBFCs. And Poonawalla FinCorp has been a star performer, no doubt about that. But now it's quite expensive as well. And we need to see how the new management is really able to deliver and how they're going to manage their book when the going gets really tough for the NBFCs on the NPA front or even in terms of raising resources.
Kunal, on the charts of Bajaj Finance, we were talking about the underperformance as well here, right?
Yeah, I think yesterday we were talking about that how the markets were doing pretty well, but Bajaj Finance and Finserv had underperformed. Today is a more of a follow-through price action for the stock on the downside. So this indicates clear weakness, clear shorting, which is happening for the stock, because on a day when the markets were doing quite okay, the stock underperformed, and on a day when the markets are struggling, the stock has continued to underperform and show signs of weakness. So this could probably indicate that the stock may now go back into retesting the previous lows. I think 57.50 was the previous low for Bajaj Finance. The stock had hit in the month of February. So I think those levels could be retested, and similar levels on the downside for Bajaj Finserv, just around that 1300 odd mark.
All right, let's get in those BTST trades as well, as we're just about a few minutes towards wrapping up today's trading session. Naresh, what's looking good on the charts?
So looking at first as a buy on Oil India, which has been doing well over the last few days. Strong momentum here, a stop loss at 265 and a target price of 290 in the short to medium term. Second is a buy on Axis Bank, which has shown relative strength in the banking space, a stop loss at 865 and a target price of 885.
Let's get in your BTST call.
I'll go with a couple of sell names over here. The first one is a sell on BHEL. The stock entering into the overbought territories on the indicators around the 78 odd mark. So targets of 75, stop loss to be kept at 80. And the second will be a sell on Manappuram Finance. Again, this stock has entered into a deep overbought territory at current levels of 117 approximately. So would suggest a sell with targets of 114, stop loss 119.
All right, there you have it. That's the view coming in on some BTST trades, Axis Bank and Manappuram Finance that our chartists are flagging off. Meantime, Dipan, what's looking good within the entire defense space, given that this sector had seen quite a bit of traction? Is the worst now or is the best already priced in?
No, I wouldn't say that, because there's so much of earning visibility for these companies, and the order books also are gradually increasing, and then there's the entire export opportunity as well. And, because of overall general market trends, we are seeing that these stocks have gone sideways and have seen mild correction. But by and large, I think this is a 2-3 year type of a story, the PSU defense and some of the other defense stocks as well. And I would continue to remain invested. The usual disclosure we and our clients are invested. We've got some small holding in Bharat Electronics and HAL. So I think that's the one that we track. But there are many, I think the Indian shipbuilders also like Mazagon Docks, Garden Beach also are at attractive valuations considering the kind of order book position which they have. But one needs to be a bit patient in the sector, and you should expect some earnings volatility because the nature of business is such that it's like a project business. So the quarters in which they have higher deliveries or higher completion of work, that is when you will see the surge in top line and bottom line. But you could have a few soft quarters as well. But that doesn't mean that the overall dynamics of the business or the prospects have diminished in any form. So very positive on most defense companies. I think you can buy them as a basket or even two or three, the ones which I named. I think they all should do pretty well going forward.
Right. Okay, Dipan, great to have you on the show. We'll let you go on that note. Good to, get in your thoughts as always. Before we begin winding up trade, let's just pick up some big trends for tomorrow, at least the near term. Kunal, is there any trend that you spot? Or is it a completely lackluster move all over?
Lackluster move. So in the morning also we indicated that not to take too many trades on the Bank Nifty, specifically on the long side.
In fact, you said no trade on the Nifty, right?
No trade on the Bank Nifty specifically, because that's an index which is getting into an overbought territory. I would still maintain that stance on the index. And I think another 200-300 points correction from current levels, maybe at 41,000 mark for Bank Nifty, that could be a good contra zone to buy. So traders should not be in a hurry to try and venture into any kind of a trend or any kind of momentum over here. Wait out for the correction to complete, and then I think the risk reward would probably be much more better.
All right. Meantime, Naresh, what about you in terms of any sort of a decisive trend that you're spotting on the Nifty or the Nifty Bank Index, given that we've scaled down by 1% on the frontline index?
So nothing major. We are still in that tight range, but there could be an opportunity closer to 17,500 to 550 levels if we get there. That's a risk reward entry point for the near term. So would wait for a gap down or another, say, dip tomorrow to look at initiating fresh moves on Nifty as well as on Bank Nifty. That would be again closer to 41,100 to 200 levels.
Begin winding up for the day, and like we highlighted earlier, besides metals, there hasn't been any sector which has managed to close in the green. And within metals as well, it's been a very feeble move. Yes, there's a Tata Steel which has really been the outperformer of the lot, and that too with only 1.5% kind of gain. JSW Steel, Jindal, Hindustan Copper, Hindalco, Nalco, SAIL, Vedanta, they've all been gainers, but less than 1%, actually only within 0.5% is the kind of gain that you've seen on these stocks. Apollo Hospitals, less than 1% again. Bharti, L&T, Axis Bank, all less than 1% higher. For the breadth of the market as well, which languished and struggled today, there was Manappuram, there was SBI Card, 2.5% gain respectively, Shriram Finance and Delta Corp which held out. But besides that, there was a whole lot of red on the trading screen. So infrastructure, media, autos, banks, chemicals as well as cement have been the rank underperformers today. Adani Enterprises down almost 5% on closing bell. M&M has managed to knock out almost 3% today. SBI Life and Reliance has been a big drag, down about 2% or so, along with Bajaj Finance, which has also fallen 2%. Bharti, ICICI Bank, TCS as well, quite a bit of drag. Within the broad end of the market, it's been again Adani for sure, and then RBL Bank, which also fell about 3.6%. Balkrishna Industries down 3.5% in trade. And then, of course, there've been a couple of other losers as well in trade, the likes of Dixon Technologies and RBL as well, which have fallen.
All right, within some of the newsmakers then, you had metals in the spotlight. Jeffrey says the underperformance is a buying opportunity. Sugar stocks, although they have cooled off, sugar prices at those 6-year highs, and that kept the stocks in focus. CLSA has got a buy rating on Manappuram, and that kept the stock a buzz. Sequence Scientific, remember the company called off the acquisition bid for Teneta Pharma, and that saw the stock a buzz in today's trading session. Data Patterns had the QIP opening today. Meantime, M&M was on Motilal Oswal's radar. They've cut the FY24 EPS, and that kept the stock as well in news. We got you that block deal news on Gokuldas Exports, about 628 crore shares that changed hands on the NSE. Asian Paints, Macquarie has its outperform rating with the target price at about 3,600. And you had some of those life insurance stocks in focus on the Feb industry growth muted. But on that note then, we're timed out on this edition of Closing Trades. Thanks so much for watching.